All right, folks, we will get started at the top of the hour in about 7 minutes. We're going to talk about this week's topic for entries and exits, which is looking at entering at a specific time of day and different options for entering and doing that with a set dollar target. right, we are going to get started with our entries and exits and looking at timed entries with specific dollar targets. And I'm going to show you an example of an exercise I did on the euro. So let's get to the charts here. So here is a chart for the euro, and I did a 5-minute chart. And what I started looking at was at 9 o'clock each morning, that candle, when it opened, I was trying to predict whether price would go long or short. And what I did was I've got a tool on here that shows the session, and this is goes from 9 to 10 a.m. And what I was able to do is I was able to put lines on here that showed plus and minus 100, $200, and $300. So I started out looking at this to try to see how much price action moved during this 1 hour time frame to see how much profit, what type of target I could expect during that time frame. And based on looking at about 30 days worth of data, I determined that $100, especially if I wanted my my stop to be $100 and my target to be $100, that was the best range that I could predictably get in this 1 hour period. So that's kind of how I got there. So the next thing I did is I said, okay, well, how am I going to decide? Do I go long or do I go short? So I looked at a couple different methods of doing that. One here, you can see that I have a base here. And when price opened here, at this point, this base was not broken yet. So this was the last base that had broken, and it had broken lower. So in this scenario, I would go short. And so I went short. And you can see here, I went short and I would have made my $100 target, and I would have not gotten stopped out at my $100 stop. So that's one way I looked at it. Another way I looked at it was a lot of people like to look at price action with two bases. And so you can see here, I have one base here and two base here. So I had two bases broken lower. And at this point, this base again had not broken because you opened up here. So using the two base rule, again, I would have gone short and I would have made the $100. So any question about using the base breaks to get in? All right, so the other thing I looked at was the impulse move. So let me make this a little smaller so we can see what's going on here. So you can see here that this impulse move right here broke this swing low. So using the impulse move, again, I would have gone short and I would have made the $100 with this trade. So that's what I looked at for, I think it was about 28 trades. Going back in time, looking at the 5-minute chart and just doing this every day. So you can see here. And I just had the session tool marking it to help me see each day. You can see here, broke two bases lower, would have gone short, and again, would have made my $100. Doing one base, you would have made the $100. With the impulse and correction in this scenario, Scrunch this up a little bit so we can get a better picture. You can see that this is, let's see if I can get it to do a, of course not. So looking here at this swing high, this was the last swing high, and it was equal, but price had already traded higher. So you would be expecting that price from an impulse correction standpoint, you don't really know. This is the last move you have, but you don't know what this impulse is going to look like. So in this scenario, when it's a question mark, it would probably be a no trade for me. So I just, because I'm not sure from an impulse and correction standpoint, because it really didn't break this high. And let's see if we can go back and look at the low. So you can see this is really a sideways market when you look at this. And so in this scenario, I probably would not have taken a trade this day when I looked at impulse and correction. So that's kind of how I looked at the charts and decided about trading. And if I had two bases and one broke high and one broke low, that was also a sign of no trade. So I had to have two bases in the same direction. Let me see. I guess I should have had one of these marked as an example. You can see right here, maybe this might be one. You can see here that price broke a base lower and then turned around and broke a base higher. And this base was not broken at the point the trade opened. So this is a mixed result. So I would not have taken this trade based on the two base breaks because I have one in one direction and one in another direction. So that was a signal of indecision. So looking at price action this way, what I found was when I looked at the overall result, you can see here with the graph, is that big enough? Let me make that a little bit bigger for you guys so you can see it well. So you can see here, the blue line is the single base break, and you can just see you're just chopping around. You're not really making much money. And you do end up losing a little bit of money, $200 at the end for the 30 trades. So then when you look at the two base breaks, that's the orange line, right? And again, you can see that is actually, you can see that you, in this kind of scenario right here, you were actually losing more money than just following the single base break, and you end up even and flat. So basically you would have done a lot of trading and not really made any money, but your broker would have loved you because you'd have been doing lots of trades. So then the next was using the impulse and correction to determine whether you were going to go short or long. So looking at this scenario here, that's the gray line. And you can see that you ended up with a little better result. But again, you only made $300. So in this scenario, on the Euro 5-minute, looking at getting in the trade at 9 o'clock in the morning, it's just not anything I'm going to get excited about or want to pursue. But I did want you guys to see kind of the idea and the thought process behind what I did, how I looked at it, and to kind of give you guys food for thought as you're looking at different markets and you start to look for patterns at certain times a day or whatever, to give you some thoughts about how you can look at it, how you can maybe think about what your price targets might be, Some of that's going to depend on, how much risk you're willing to take, heat, whether you just want to risk $100 or a couple $100. And a lot of times that's going to depend on the asset and the volatility of that asset. So that's kind of what I did here. I really don't have anything else for this session. So unless you guys have questions or something else you want to talk about, I will probably be wrapping this up pretty quick because I want to be respectful of everybody's time.
How was the time of entry chosen? It was just arbitrary. Let's just try 9 a.m. and see what happens.
Yeah, what I did was I looked, I did some back testing and looked at the best time of day when, from a supply and demand standpoint, when those supply and demand bands seem to perform better. And so I kind of used that as a starting point to see if that would be a good time to get into a trade. And so, ultimately that time of day may be fine. It's just, you may have to use a different method to determine whether you want to go short or long. And you may, the $100 target is pretty small.
Yeah.
So, can you, probably this asset is not a good choice just because the time of day you weren't seeing enough price movement, enough volatility. Because as you look back through time at the different, you can see, it pretty much price moves maybe, really maybe $300-400 during this time of day for that hour.
Right.
Looking at the highs and lows of those. So it didn't, more it was about looking at the exercise and understanding, thinking about different ways to determine whether you were going to go short or go long. But with having them marked on this chart, it's pretty easy. You can see here what you got. Again, was it about a $400 range or so?
Yeah.
So, that was the range for that 1 hour time frame was pretty consistent. You didn't see a whole lot of variation.
So then we might get better results if we had a more volatile asset to trade.
Yeah. Maybe I should have picked something like CL, right?
Oh, that's volatile, all right.
Yeah. Yeah. Or, obviously you can do this. You could look at this with an ETF or a stock as well. I just chose the euro because basically I had some data on it. So at least I had some starting point to start to play. So, but, the good news is, I back tested it. I saw it wasn't going to be a positive thing. So I know, move on to the next thing.
Yep.
But if you could get something like this to work, it'd be pretty cool to just automate it and let it run.
Yeah. Yeah. You'd have to find the right asset, one that does something consistently at a certain time of the day. And then you might be able to take advantage of that, is really what it comes down to.
It's like the 10-year where a lot of times they try to sweep the stops.
Yeah.
There's certain assets you do that. But boy, I don't know if you could figure out how to run that or not.
Yeah. Yeah, that would be difficult.
Yeah. Yeah. So, and obviously at this time of day, the euro is not as heavily traded as during the London,
Yeah, that's another good point.
you know. But again, based on the data I had, at least from a supply and demand band standpoint,
Yeah.
this was the better time of day to get in a trade and have a band hold. So that kind of is what got me started thinking about that time frame.
Well, it would also behoove you then to take a look at any nearby bands when you're getting in to make sure you're not going against a band before your target.
Yeah.
Uh,
Yeah. Yeah, definitely. Definitely. Yeah, I didn't have bands turned on for this because it makes the chart fairly busy. But
yeah,
yeah, that would be one thing to see if you were actually um you know doing something that if you were entering, if you were going short and you were shorting into a demand band, that might not be the best move.
yeah, yeah. And then again, if you're going long and there happens to be the demand band there, that's kind of acting as
Yeah,
your
trampoline.
backboard. Yeah, exactly.
Yeah.
So that could help you achieve your results as well. So there's various variations we can use on this, um, which might be able to improve the performance.
Yeah. And so far, as we've looked at the different types of entry and exit strategies, we haven't really done anything with indicators, playing with them.
Yeah,
I don't normally really use those any indicators
yeah.
for getting in or out of trades.
Hmm.
That's where if that's something that people want to look at, um, you know, need some suggestions. Since that's not something I normally do, as to what people think might be, good to play with.
Well, I know a lot of people like to look at divergence on the RSI, but that's not a terribly precise timing mechanism, but it does let you know that something is likely to happen
Hmm.
quite soon. And I suppose that could be used to assist in entry or exit.
Hmm.
Um, I mean, most folks doing supply and demand, if they're using zones, they may use an indicator to help them get an idea of whether a zone is likely to hold or not. Like Brandon's rule for the RSI, uh,
Right.
that kind of thing. But yeah, I don't know of anyone myself who trades directly off of an indicator.
Yep. Yep. So if somebody watches the YouTube later and there is an indicator that you want us to look at for entries and exits, you can just throw something in the comments and we'll do our best to look at that and create a future session around it. Um, and I'm still noodling on what my next um, strategy I'm going to try. So I'll do a little more poking around and see if there's something out there that might be fun for us to look at. All right. Well,
One
yeah.
old strategy that used to be used for exits, I don't know about for entries, but was to have a longer term moving average put
Mm-hmm.
on the chart. And you would get into the trade and then you would use the moving average to determine when to exit. And that works if you have a trending market. If you have a sideways market, it doesn't work very well at all. But if you have a trending market, that can get you in to the trade and help you ride out pullbacks, and stay in the trade until finally prices significantly change direction. So that might be something.
So is that like are you talking like a 200 or?
No, it'll be more like a 50.
Okay.
And it depends on how volatile the market is and, how big swings you need to ride out as to exactly the length of the moving average you would use. Now, the disadvantage to using, a big moving average is that you end up giving back a lot at the end after price finally does turn. But if it keeps you in for a long time, then it may well be worth the price. But the main problems you get into is, again, if it's a sideways market, you can get a lot of false signals to get out.
Mhm.
And, it doesn't work well. And then again, you're trading off trying to stay in the trade longer, maybe pick up that next upward move or something like that, versus how much you give back at the end because it's slow in getting you out of the trade.
Yep.
So you may be up $1,000, but you end up with only $200 in the end because you gave $800 of it back, hoping that there was going to be another leg up, and there wasn't, type of thing.
Yep.
So there's various trade-offs there. And then people had other variations on that using 2 moving averages. I think that's where you get a MACD from, or even 3. But yeah, I don't think many people use those anymore.
Yeah. I guess we could do something really like is it Ichimoto cloud?
Oh, the cloud. Yeah, I've heard
Yeah.
of that. I've seen
Yeah.
it, but I don't know much about it. Yeah.
Yeah. I know enough to be dangerous. I've got some notes on it, but might be something fun to do something like that and just see.
Oh, that could be interesting. You could see how well it works. That would be useful to know, because I have seen people talking that and using that.
Yeah. Yeah. They marry it with supply and demand.
Yeah. Yeah.
So cool.
Yeah.
All right. Well, I am going to wrap this up. You guys have an awesome rest of your evening. And like I said, if you watch the video later and you have thoughts or suggestions, please put them in the comments.
Okay. Thank you, Lisa.
Thank you, Lisa.
You're welcome.